Hello, I'm David Cariani and welcome to the RFA Weekly Market Update. After a quiet and slightly negative final week of 2017, markets kicked off 2018 with a bang. We will review the results for 2017 as a whole, cover economic data releases for the last 2 weeks, and update you on a couple portfolio companies. But first, let's take a look at this week's market results. We had the S&P 500 getting a solid start to the year, returning over 2% so far. The Russell 2500 1.3%, and international stocks also over 2% this week. Government bond yields climbed to 2.47%, and mortgage rates held steady, as well as the dollar index was little changed. But crude oil continued its climb, settling in over $61, and yesterday crossing over $62, as you can see from this graph, for the first time since its major slide in 2014. And in economic data, we had weekly jobless claims climb slightly to 250,000, but the big disappointment came from the monthly jobs number in December, dropping to 148,000 jobs created, while the unemployment rate held steady at 4.1%, and wages grew at the same annual pace that they have been growing, which is 2.5%. While consumer confidence for the month of December did slip down to 122. Now let's break down and review the market's results for 2017. First, we're going to look by asset class, where we can see that while 2016 was the year of value, 2017 was most definitely the year of growth. Large cap growth stocks were the best performing category, over 27% return for the year, and foreign stocks were right there alongside it, also posting over 27% gains. While small and mid-cap growth stocks were up over 24%, large cap value stocks were up still a very respectable 15%, and small and mid-cap value stocks were up 10%, while bonds chugged out their 3.5% return, and cash getting ever closer to a 1% yield. Now let's look at the results by market sector. Leading the way with over 38% return for the year was information technology, followed by materials at 23%, consumer discretionary just under 23%, and financials at 22% for a second year in a row. Healthcare also 22%, and the market as a whole, measured by the S&P 500, was up over 21%. That is with dividends included. Then we had industrials over 21%, consumer staples up 13%, utilities up 12%, real estate up 10%, and the laggards, energy and telecom, both down just over 1% for 2017. And in portfolio-related news, this week Alibaba surged after the Wall Street Journal reported that its mobile browser was used by more people in India and Indonesia than Google's Chrome. As the #1 browser, they were used by 51% of users in India and 41% of users in Indonesia, the world's second and fourth largest populations respectively. The stock surged over 9% this week as a result. And on Wednesday, Intel announced a vulnerability in their chips to 2 major hacks dubbed Meltdown and Spectre. This affects their chips manufactured as far back as 1995. They have already announced a software patch that will fix 90% of recent processors by the end of this week. The reference to recent processors means those produced in the last 5 years. The stock is down 2.5% for the week as a result of this news. And next week we'll have updated business confidence numbers, which are expected to rise due to the new business tax cuts, and we'll have wholesale inflation numbers for the month of December. But that's it for now. Thanks for watching. We hope you can join us again next week, and Happy New Year.